Hello, welcome everyone. This is the module number 4, practical problems regarding the fund flow statement. As we already discussed the many things regarding the fund flow statement, and as I mentioned that the fund flow statement is a one type of an analytical statements for the financial statements. This is a comparative analytical statement of the financial statements where we are going to compare two consecutive years balance sheet as well as the profit and loss account, and that is reflected in the different format, and the different format which actually represents the how the fund comes in the business and where the funds has been utilized. So company willing to know that the how the fund has been comes into the business and for the utilization of the certain purposes, they just wanted to see the moving and flowing of the fund in the business and out the business, and then this particular situations would be used for analyze the company's performance regarding the changes of fund in the business, and would be finalized and prepared some amount of planning for the future prospects. And that's why we are going to solve the fund flow statement problems. Here I am going to solve a few problems in front of you which are actually showing a different type of situations of the fund flow statements, which would be helpful to you to understand how the fund flow statements problems can be solved out. But before that, I'll tell you what are the sequences to solve the fund flow statement problems. So fund flow statement problems needs three different important statements. The one is working capital statement, the second is adjusted profit and loss account, and the third is fund flow statement itself. Now see here that all the three statements have a different ideology and different understanding. Working capital statements is actually showing all about the information of current assets and current liabilities. So it means the statements reflects only the changes of current assets and current liabilities. So whatever the changes occurred between the 2 years of these two assets would be reflected in this working capital statement. And this working capital statement is showing the changes of fund in and fund out of the current differences of current assets and current liabilities. So we would be getting an answer from this statement whether it's an increase or decrease in working capital. Whether it is increase and decrease in working capital. So we will see the formula. We were already discussed the formula at the time of theory. What are the formulas for changes of working capital? So the formula would be used here at the time of when we prepare the working capital statement. Now see the adjusted profit and loss account. Adjusted profit and loss account is a revised format of a profit and loss account only. Ultimately it's a profit and loss account only. But here the purpose of profit and loss account is different, and that's why it's used as adjusted. Means there are few adjustments entry which are actually concerned of the changing of funds. So the company needs to identify the few entries which are actually not affected to the fund, but it's affected in the financial statement more than one times. So that means they need to identify certain items, non-cash, provisions, the items which are already recorded twice in the, or it is recorded in as per the accounting system, but it's affected twice in the profit and loss account. We need to revise one entry in the particular statement. So we identified few entries regarding this and recorded in this particular profit and loss account, which is called adjusted P&L account. And from it we would be find out adjusted profit, and this adjusted profit is considered as a sources of fund. Here the increase and decrease, the decrease in working capital, it's ultimately a sources of fund, where the increase in working capital, it's a part of a application of fund. And then the third most important statement, that is fund flow itself, which is actually prepared in T-shaped format here, and that shows the sources and application of fund. So company need to identify that which are the sources of funds comes in the business and where the fund has been actually utilized. And from this statement, company identified that there are fund in and fund out of the business, and from that they will actually get an idea that what are the sources and application of fund. So this is what all about the part of the fund flow statements, and for that we are preparing a fund flow statement in certain sequences. So first we will prepare always working capital statements. First we are going to prepare a working capital statement. That's the first part. The second, we are going to prepare adjusted P&L account, but along with the adjusted P&L account, if there are an adjustments, then we will prepare as per the adjustments some ledger accounts also. So only P&L account is not going to prepare, but along with the adjusted P&L account, we will prepare some ledger accounts also as per the adjustments are given in the additional item. And at last, we will prepare a fund flow statement. So this is a sequence. First is working capital statement from the available informations, balance it. Second, we will prepare adjusted P&L account, that is also to be prepared from the P&L account and balance sheet information as well as adjustments. Along with that, we will prepare some ledger accounts also where it is necessary, and at last we will prepare a fund flow statements. So now see here the different type of things. We would start problem number 1 where we are supposed to solve out the case of the fund flow statement. So let's begin with the problem of the fund flow statements. All of you have to refer your practical problems segment. From that you take it your first problem, which is actually given the following are the summaries of the balance sheets of Bharat Vijay Limited as on 31st 12 2002 and 2003. That means that we have an information for 2 years, 2002 and 2003. Then the balance sheet is given, comparative balance sheet for 2 years. And after the balance sheet, if you are going to refer, there are some other additional informations is also given. So from that balance sheet as well as the other informations, they ask to prepare. So refer after the balance sheet last line. From the above information, prepare a statement of sources and application of funds for the year 2003. That means we need to prepare here fund flow statement for the period of 2003. So see here. Naturally, when you are going to compare the 2 years comparative balance sheet, then the always current year balance sheet fund flow statement has to be prepared. So 2002 is a last year, 2003 is a current year. So we are preparing the statement fund flow for 2003. But here the fund flow statement directly cannot be prepared, as I already mentioned earlier that you need to follow the certain sequence for the preparation of fund flow statement, and that's why we will start to prepare first statement of changes in working capital. So this is your first part where we are preparing changes of working capital, and for that the pro forma of this changes of working capital is something like this. 2002 year data, 2003, then the changes in working capital. It is increase and this is decrease. This is your format where the changes in working capital has happened. Now, as we already discussed this format in the theoretical video lecture, that the current assets and current liabilities are going to compare. That is what I mentioned earlier also in this lecture itself only. So current assets and current liabilities. How you can identify the current assets and current liabilities? For that you need to refer a balance sheet. So all of you just see your question and refer the balance sheet. It starts on the asset side because we start with the current assets, and the first is building. Building is not a current assets, it's a fixed assets. Machinery is also not a current assets, it's a fixed assets. Then the stock is given. The stock, inventory, it's purely a current assets. and the stock for the 2 year is given, that's 90,000 for the last year, and the 80,000 rupees is for the current year. Now we need to apply here our formula, or if you don't want to apply the formula, you can directly understood that the current year current assets, if that, because of you need to then compare with the cash balance, and then you have to instead of the formula you need to apply that equation may be all the time calculation, it's little stretch. So better to apply the same thing. If the current year current assets is lower than the last year, it's always decrease the working capital. If the current year current assets is lower than the last year, it's always decrease a working capital. Reverse, if the current year current asset is higher than the last year, then it is increase a working capital. Alright, so these are the formulas for current assets. Now see, after stock, next is debtors, and the debtors value last year is 1,40,000 and the current year is 2,40,000. So now see, it's a reverse. Here the current year current assets is higher than the last year. It means that it's an increase in working capital. We need to identify the difference between the two values. The difference between the two values is 1 lakh rupees, and the current year current assets is higher than the last year. That's why it is recorded under the increase column. So it's recorded in this column because of the difference it shows increase. After the debtors, the next item is prepaid expenses. So prepaid expenses is all about current assets only, paid in advance. Prepaid expenses is something like paid in advance, and prepaid expenses are given, that is 15,000 and 25,000. So 15,000 and 25,000, again it is the same situation like a debtors. Current year current assets is higher than the last year, so the value it's considered as a increase value. Alright, after the prepaid expenses we don't have any more current assets, so now make a total of the current assets. The total is, consider A. The total of this, it comes to 2,45,000. 14, 23, 24, 25. 2,45,000. 320 and 3,45,000. So if you are going to see the net change, the net change is 1 lakh rupees. Or anyway also you can find out the increase is 110, decrease is 10, 110 minus 10, that comes to 1 lakh. So the net change is 1 lakh. After current assets, now we will see the current liabilities. Now all of you see from the liability side and identify the current liabilities. Start with this share capital. Share capital is a long-term ownership fund. It's not considered under this head. Debentures is also long-term borrowing fund, not to be considered under the same head. P&L account, it's a retained earning. Ultimately, it's a reserves and surplus. It cannot be considered under the same statement. Next is creditors. Creditors is definitely a current liability. The last year creditors value was 70,000 and the current year creditors value is 80,000. Now the question is whether it is an increase or a decrease. Here the formula is reversed than the current assets. Current assets formula was what? If the current assets current year higher than the lower than the last year, it's decrease. If it is higher than the last year, that means it is increase. Here it is reverse. If the current year current liability current year higher than the last year, it is considered as a decrease in a working capital. It's reverse than the current assets. Working capital में current assets से इसकी formula reverse है. That means we need to identify that if it is higher than the last year, it's decrease. Here it is higher than the last year, it is increase. So the creditors shows decrease in working capital. Next is bank overdraft. Bank overdraft is also a current liability. So see the bank overdraft for each year, it's 25,000. So there is no change in working capital, whether it is increase or a decrease, the values remain same, so no change at all. After the bank overdraft, next is provision for taxation. Now see, provision for taxation, as I have already discussed in the theory part, where the provision for taxation would be considered as a current assets, as a working capital statement item, or need to prepare a separate account? There are two possibilities. If you remember, I told you, if there is any adjustments regarding the provision for taxation, adjustment means in other information, if there would be anything mentioned regarding the PFT, provision for taxation, it cannot be considered as a current liability. Then we will prepare a separate accounts. But suppose if there is no item and not at all adjustments related to PFT, provision for taxation, then you can consider as a current liability. Now see the additional information. Is there any adjustments regarding the current liability? No, we don't have any adjustments regarding the provision for taxation so far, because the first is net profit, second is depreciation, third is something purchases, and fourth is related to dividend payment. So provision for taxations, we don't have any adjustment, and that's why if it is not at all adjustments is given regarding this item, would be considered as a current liability. And the value for 2 years is, one is 30,000 and the other is 40,000. As the same way the formula is applied, if the current year current liability is higher than the last year, it's considered as a part of decrease in working capital. So this is the situation of current liability. Now that's it, current liability. No more, we have more current liabilities. Make a total of that. Just make a total. This is 1,25,000 rupees here. This is 1,45,000 rupees here. Alright. So now you can find out the amount of the changes, that how much amount of a working capital we have. Net working capital, and the net working capital you can find out the difference between A minus B, that means current assets minus current liabilities. See here the current asset is in the year 2002 2,45,000, where the current liability is 1,25,000, so the balance is 1,20,000. Difference of the working capital, net working capital for the year 2002 of this comparison, that is 1,20,000. Now compared for the 2003, that is shows that almost 2 lakh rupees is difference. It's a 2 lakh rupees difference between the current assets and current liabilities. 3,45,000 minus 1,45,000 current liability. So the difference is net working capital in the year 2003 is 2 lakh rupees. Now from this comparison and also from last two comparisons, we need to identify whether we have an increase in working capital or a decrease in working capital. So ultimately this shows that whether we have a changes of working capital in which direction. Now just make a total of the which side is total is higher. Naturally increase total is higher, right, and the decrease total is 30,000. All right, so it means the shortage on this side, which is 80,000 rupees, correct? Which side is higher? Increase side is higher. It means that your answer is increase in working capital. If the increase side is higher, it means your answer is increase in working capital. Anyway also, if you want to cross tell your answer whether it is right or wrong, you can identify it from this. Your net working capital current year is 2 lakh. And the net working capital in the year 2002 is 120. The difference between these two is 80,000. But 80,000 is right. But here the current year net working capital is higher than the last year. It shows increase in working capital. So this first part of the fund flow statement, that is changes of working capital, and from that we find out increase in working capital 80,000 rupees. It is your application of fund. We make a star here just for our reminder. You also just make a star over there because of the answer may be with you. So you make a star there. This would be recorded in the fund flow statement as an application of fund. Increase in working capital rupees 80,000. So now after the changes of working capital value that which shows is increase in working capital, now we are moving to the second step. The second step is we are preparing adjusted profit and loss account along with necessary ledger accounts. Now how you can identify which ledger accounts is required? So that has to be decided by the person which accounts are required. According to my observations which I want to tell you how you can identify the ledger accounts, you have to first refer your adjustments. Now see the adjustments. First adjustment is net profit for the year was rupees 40,000 after charging depreciation. So that is related to adjusted profit and loss account, which we are going to prepare. Second is, during the year depreciation charge was rupees 30,000 on building and 40,000 rupees on machinery. That means we identified that we need to prepare two accounts. One is a building account and the another one is a machinery account. So the two accounts are required, building and machinery account.